Raghuram Rajan was the governor of India's central bank. He's now a professor at the University of Chicago. He joins us live now from Chicago. So um, give me your sort of prediction for what we're going to see on Wednesday. Do you anticipate the Fed is going to pause here and really assess what's happening to the banking sector, or do you anticipate a 25 basis point hike?
Well, I'll give you a conditional prediction. If nothing serious happens between now and Wednesday, I think the Fed will believe that it has done enough to stabilize the banking system. Of course, we saw some ructions in First Republic today. But if it feels that at least the sense that there might be panic is subdued, then it'll go with 25 because, doing nothing raises the risk that it knows more than it lets on, that there's something deeply problematic. And of course, there is also the problem that prices are rising significantly, and its job is not done. So unless it really thinks there's a deep financial crisis on the way, which will curtail growth significantly and do the Fed's job for it, pausing at this point would be problematic.
But it's interesting. I mean, you talk about the idea of not seeing anything happen between now and Wednesday. But when you think retrospectively about all that's happened in the past week, be it with Silicon Valley Bank, be it with Signature Bank, be it with First Republic, I mean, abroad, obviously, there's the Credit Suisse news, that rapid sort of takeover by UBS, hastily announced over the weekend. I mean, the Fed does have a lot to digest here.
It does. I don't think, when Chairman Powell spoke the last time with Congress, that he had on his mind that we'd be dealing with a banking crisis pretty soon. But that said, I think the issue really is that inflation is also a job undone at this point. And to the extent that they feel the problems within the banking sector are contained with the sort of support given to depositors, with the lending that is happening, they might believe that the best course is to do 25 while making all the assuaging noises at the same time. Yes, we're watching the financial sector. We will do whatever is needed to support it at this time. And we believe that we've dealt with the most difficult problems so far. Words to that effect will perhaps have a calming influence on the markets also, while saying they are still continuing on the inflation issue. Now, they will say this gives us a month and a half to watch and see what else is happening without signaling to the markets that we have paused. And we'll do what it takes. I mean, if in fact there are deeper problems in the financial sector, we might actually, cut rates at that point. But for now, given what we know, this is what we do.
I mean, it's interesting because it's not just about, shoring up these banks. That is part of it, but it's also about reassuring depositors. And what I've learned over the past week is that those are two separate things. Just because you shore up the banks and provide money doesn't necessarily mean that depositors are automatically going to be reassured. If you end up having a lot of people at the same time pulling their money out of these smaller banks, I mean, that could lead to really mayhem for the banking sector. So how does the Fed navigate that aspect of it?
Well, that's what I think they will be watching very carefully, and they have a better sense of that than we have, right? Because, to some extent, the depositor outflows are something they would have a sense of. Now, the real issue is, have they assuaged the large uninsured depositors? Now, in many small and medium-sized banks, those depositors also have business links to the bank. They have credit from the bank, and they could be stickier than some of the depositors in First Republic or in Silicon Valley Bank. But that's something the Fed will be paying attention to. So if there is a silent depositor run going on, and as you said, it may well be that corporate treasurers, a small or medium-sized corporation's treasurer, doesn't want their money to be subject to any kind of risk, even the risk that the Fed will step forward and support those deposits or not. So they might think the better part of valor is to withdraw the deposit and put it in JP Morgan or Citi or Bank of America. So I think the Fed will be looking at whether there are silent depositor runs going on or whether they've calmed down. And if they're going on, it would move them more towards zero, but also saying this is not a pause. We are watching. While the system comes down, we will watch, but we're not done with rates as yet. A lot depends on what happens to inflation going forward. So they will sort of talk to both sides. But again, I think it depends on the information that is coming to them between now and Wednesday on the financial sector.
Yeah, I mean, they have a lot on their plate. I mean, inflation, it's interesting because headline inflation appears to be sort of going down ever so slightly, but the core inflation seems to be more entrenched than I think people had anticipated, and that's the last thing you want to sort of end up as very sticky. Rajan, Dr. Rajan, thank you so much. We appreciate it. All right, we come back from